hi, Keith. Good morning to you.
Good morning. Thank you for having me.
Thank you, Keith. Thank you for saying yes to be interviewed today. As a formal introduction, my name is Nicolette. I am the creator for the podcast titled You're Worthless. Read that again, the juxtaposition of your very soul. Now, I know we had to reschedule a couple of times, and I would like to extend my gratitude for making it this time around. And thanks to technology, we're here right now.
That's right. I'm really happy to be here.
So, Keith, I would like to read a bit of your introduction for our listeners today, and then we can get right into our conversation.
Absolutely. Thank you.
So, hello, everyone. We have Keith Blackborg here with us. He is a CPA, a proud father, husband, wealth optimizer, and tax strategist. He transitioned to wealth as the business school and reached work optional by age 30. So many jargons. We have to unpack those. Keith served as the director of acquisitions for a hedge fund that transacted the largest private sale of homes in U.S. history. His company, Financial Journey, delivers billion wealth strategies to millionaires. Keith Blackborg also helps business owners and accredited investors reach work optional in 3 to 5 years. Then he helps you optimize wealth growth around your vision and impact for yourself and the future. Members accelerate their wealth growth through superior investments, maximizing exits, advanced tax strategy, collaborative due diligence, and masterminding with their community of successful peers. Wow, I have a lot to learn from you today.
Happy to be here.
So, Keith, before we get down to the nitty gritty of things, can you share with us what was it like growing up as a Keith Blackborg?
I grew up in a middle class household. My mom was a teacher, and my father still sells insurance, nothing fancy. And I was kind of taught that employment was the way to go. But I've always had an interest in business. Even in the fourth grade, I dressed up in a little suit for what you want to be when you grow up. And wanted to be a businessman. I didn't really know what that meant then, but I knew I wanted to do it. So business has always been an interest. And in time, I wasn't quite sure how to get into the world of business, but I was told that if you understood the finances and accounting of businesses, you would always be a great advisor. And it was a great entry into the greater world of business. And so I eventually took the CPA route.
So, Keith, I want to ask you, what do you mean by work optional? Does it mean that you have the option not to work anymore because you've accumulated some amount of resources to sustain yourself? Is that what it
Correct.
means?
So if you try and tell a bunch of entrepreneurs to retire, that sounds terrible. Most people like doing something. They often like working. And so the thought of them having to go into some house or play bridge or not do anything for the rest of their life sounds awful. And so really work optional is the freedom to decide if and when you're going to work. And often we will help somebody exit their business, prepare it for sale, have that big exit, but then they still want to do something, and that's fine. We will encourage you to take some time to grow through that quiet, because you need some of that reflection time to solidify some of those lessons and learnings and to grow as a person and in your soul. But beyond that, it's really the freedom that most people desire.
So I know I read a bit of your introduction just now, but can you tell us what was your backstory that I'm sure there were pivotal moments, or if not
Sure.
a moment that catapulted you to, okay, I'm doing this.
Yeah. So I started my career at Deloitte, Big Four international CPA firm, worked lots of hours. I feel like every hour, every year there was worth 2 or 3 someplace
Were you an
else.
auditor?
I was.
Okay.
So,
I was in EY for a bit.
oh, good for you. Oh, man, as an auditor, consultant, well, you guys were even doing better than us. So I had,
I beg to differ, but okay.
we'll see. I don't know. I had some, my average billing over a course of when I was there was something like 78 hours a week. I had a few weeks where we did I billed over 100 hours, and anybody who's been in that business knows that you're eating hours to be efficient.
Yes.
And so you do that very long, and that's tough. So I had a few life lessons along the way. So when I was there, the average partner was making $875,000 a year. And when you're waking up at 7 a.m. and leaving work at 3 a.m., no amount of money is worth that. And so in time, I left and I went to work for some former Deloitte partners who ran taxes. And so I grew in that respect. Along the way, I started a real estate CPA focused CPA firm focused on high net worth apartment syndicators. And so my wife worked and ran an office for a real estate education company. And so it was a really great partnership for her to learn real estate, for us to attract clients to the CPA firm. Meanwhile, she started growing our real estate practice, which was initially single family houses and later hotels and apartments. For me, it was growing the CPA firm focused on those folks, and I knew how those businesses work. So in some ways I was a tax accountant, in other ways I was a consultant to help people's businesses work better. Fast forward a few years, we had a growing firm, 5 employees, or more help in India, contractors and stuff. So we had a reasonably sized firm, and each tax return we did was pretty complex with 20 to 200 investors. And so I felt important. I felt like I was good at what I did, but I could never get away. If I went on vacation and somebody needed help closing a 8 or 9 figure transaction, I felt like I had to be there.
Yeah.
So absolutely, I got the call. And so ultimately there had to be a decision to be made. And the path I was on was going to make me wealthier and wealthier. But there was a divorce being considered and I could not get away with it. So I had a decision to make. Either I could go down the path, make more money, get the divorce and have all sorts of financial success. In the end, I ended up selling the CPA firm. We exited out of real estate. I'm sure it cost me a ton of additional upside, but we'd already made some significant money. And it was also 2016. I thought real estate only went in 7-year cycles, or that's what we thought at the time. I was wrong, but we ended up selling and traveling the world for the next 3 years.
But you saved your marriage, so
I did.
So no, yeah, no, not even a regret. Yeah.
Exactly. So 3 years later, we got the best souvenir we could have out of our travels. That was our firstborn son. And so now we've got a 5-year-old, 2-year-old. They're so much more fun than just putting hours into a CPA firm. 2019, I was like, what do I want to do next? If I want to make as much money as possible, I think commercial real estate syndication is a great way to make a lot of money, or start in private equity. For me, though, I saw the freedom and the joy it brought for me, and I chose financial journey as a lifestyle business. I actually like talking wealth. I like talking taxes, and I want others to have that same kind of freedom and be able to escape some of the monotony of work. And we do it in a way that is fun, that people actually like enjoying the journey. And so while we talk wealth and taxes, we also will go on a family vacation to a beach somewhere, go mountain escape or skiing. There's different neat adventures that we just put into it that are optional parts of being in the community.
Well, that sounds so fun, but I'm pretty sure there were ups and downs in your journey.
Yeah.
But I mean, now that you're on the other side, I'm pretty sure you must be very proud of yourself.
I feel humbled and blessed to be where I am. I realize there's still a lot to learn. I have definitely learned a lot. The more you realize there's even more to learn. So I get to work with some really neat people, from people who are more starting off in their journey that are still accredited investors, but are really wanting to know how to start, to some people who are in that high 8-9 figure range worth, and they bring some really interesting strategies and advice. That it's a great relationship, because I learn a lot, but I also know some things that really help them get further. And so having all those people together in a community really helps everybody grow that much faster.
Wow. Thank you so much. I am learning so much from you right now. Now, okay, Keith, the question, I think we did touch on this a bit just now, some of the points, but how can business owners reach work optional in 3 to 5 years?
Yeah. Usually most people we start with already have some sort of equity in something, whether that's in a business, in real estate, or they've grown some passive investments over time. And often what we're doing is just how to optimize those existing assets. So when you own a business, for example, some people at some point they get burnt out and they just want to sell. Our job is to catch you 3 to 5 years ahead of time. And we want to talk about what do the financials need to be, what are your standard operating procedures need to be, what are your team, your contract, what are all the things that we need to look at to optimize that business for sale. And often we can take something that is either unsellable or worth just a little bit and make it worth 3 to 10 times more with just a little effort ahead of time. So along the way, you likely come in, you've got some cash to invest. You're learning how to invest that cash when the money is small, and you're seeing real results. And that way, when you get your big exit, which could be 1 million, 10 million, 100 million, then you've already learned some lessons along the way to feel more confident in the way you're going to invest that later.
So the people that they're coming to you, typically, what's the audience, the demographic? I'm
The
curious.
oddest demographic?
The audience, the
Oh, the
demographic.
audience demo. So everyone is an accredited investor, meaning $1 million net worth, or you're making $200,000 to $300,000 depending on your marital status. And usually they're a business owner, real estate investor with a rental portfolio, or they're in commercial real estate, or they're a high income earner. So we've got doctors, lawyers, other professionals who have done well and now want to optimize that and invest that well into self-directed investments.
Interesting. Okay. Now, how does one find investments with asymmetrical risk?
So things with asymmetrical risk, meaning there's a high upside and low
Mm-hmm.
downside. For me, it starts with value, finding something that you can buy at a discount, and or creating value. So some of the people we've invested with have been turning like hotels into apartments, taking hotels, which recently have been a distressed asset, and turning it into a more profitable asset, or office buildings, which are currently distressed, changing the nature of those, which could be into apartments, of maybe a mixture of retail. I've known there's some people that we've invested with that have taken large office buildings and they've split it up, where they've got their office condos, their residential condos, and retail on the bottom floor. And that's ways to create value. Sometimes in stocks, there's certain members of our community that love doing the deep dive due diligence on stocks. And sometimes they share that feedback with others. That could also be a business. Some members have bought businesses, or sometimes if you already own a business, that is understanding that you just need to invest more in your own business. So there is no one size fits all strategy for us. We are looking at what are your individual skills, financial resources, your relationships, and then charting a path from the things that you like to work with to work optional. And you're surrounded by other people who are doing a variety of things. And probably the best way to get comfortable with something is seeing other people that are doing
Do it
what you want to
first. Yeah.
do,
Mm-hmm.
and you get to watch along. And if it resonates with you, by all means, people are willing to help you. If it doesn't, you can pick something else, but you get to see a lot of different things in one places, which is one of the reasons why I think college, pros and cons, but college, one of the great things is you get to meet a bunch of students who have a bunch of different majors, and you get to see what they like or don't like, which is why so many college students choose to switch the major at least once, because they see something that's better. And so we really want to provide an environment for people to learn and to see what's working for others and be able to apply it to their own journey.
You got me curious there when you said seeing other people taking that pot, and then you, after doing your, having your calculated risk and whatnot. What is your take on being the trailblazer of something? Be it
Ooh.
investments or starting something new, I don't know, from scratch.
So if you're the trailblazer, there's enormous risk because you're the first one to do it. On the other hand, if you're trailblazing in an industry that you already have some significant experience with, or you know that niche, then you may very well be the right one to blaze that new trail. And so it depends on where you're at. I think one of the biggest mistakes people make is they're switching, doing a new activity every few years, like serial entrepreneurs. If they focused on one thing for a long period of time and they optimized it and reiterated and got better and better, they'd probably get much further faster. Now, somebody who has been in a significant industry and focused and spent 30, 40, 50 years, which is what I'm planning on doing with Financial Journey, you just keep getting better and better over time. Now, there might be something new I try, but it's from my personal experience of where I've seen results. that will help me build that out. And in some ways, I feel like I am a trailblazer in the self-directed space, because I don't know of anybody who's really teaching how to self-direct investments like we're doing, and not taking like a cut of all the investments you make. There's not as much money in it, but there's a much higher impact and results in it for both the members and for myself. And so the goal, once again, is not just to maximize money, it's to maximize results for our members.
Thank you for sharing your thoughts. I love that. Okay. What unique and advanced tax strategies could the audience here today take advantage of?
Well, there's a bunch of them. An interesting one. Let me ask you, is most of your audience international or US based?
Yeah, US and Malaysia.
US and Malaysia. So some retirement account strategies might make a difference. Okay.
Yeah.
I'm less familiar with the Malaysian tax system,
Yes,
so I'm gonna focus
caveat
in
there,
on
yeah.
some unique ones here for our members. So here's something almost everybody could take advantage of, but almost nobody has heard of: discounted rollovers. Probably doesn't even ring any bell, but you've probably heard of retirement account, like an IRA or 401k. Probably
Yeah.
know a traditional pre-tax fund versus a Roth post-tax fund. What the strategy is: moving money, rolling money from a traditional retirement account to a Roth retirement account at a significant discount, typically 20 to 80%. How does that work? So let's say you put $100,000 from a traditional account into a apartment complex. That apartment complex, right after you buy it, we're kicking out some non-performing tenants. We're doing a major rehab. And so the drop in that apartment complex, that income is going to drop, at least temporarily. Apartments are loosely based on the net operating income of that apartment complex. So if that NOI drops from $80,000 down to $40,000 a year or month, and the value has dropped roughly in half, I'm oversimplifying for the example, then your initial investment of $100,000 is temporarily worth $50,000. We get an independent valuation done, and we get that rolled over, the asset, not the cash, from the traditional account to the Roth account at $50,000. You pay taxes on the $50,000, but then it pops up in value. The asset pops up in value after a successful turnaround of the apartment complex, maybe to $200,000, all within the Roth account. So by timing the rollover of that investment, you can do it. You can make a lot of money doing it. You can also do it with like hotel to apartment conversions, certain business investments. There's a bunch of different investments that might align with that. And that's part of what we help do, is where can we identify investments that also have a tax strategy in line with them that's really going to serve you well.
Wow, wow, wow. I can see it. I can feel in your energy that this is in your blood. You love teaching people, and I'm learning so much. And I think the audience today will be very, very grateful, even if they don't work with you, but they're learning from you. So thank you for that, Keith. Okay, few more questions. What is your best tax advice to passive investors in private investments?
Ooh, I think that would be the discounted rollover one. Is a big one.
When you gave me the example of the 100,000 and the 50%, I'm like, okay, no, that's huge.
Yeah.
That's huge.
Some additional ones, it really depends on what you're getting into. Sometimes we always, probably my best tax advice is not to invest based just on the taxes. So often people will put $100,000 because somebody's
Yes.
promising a big write-off. And
Yeah.
often when somebody is marketing the big write-off, that's all you're ever going to get. You're going to lose your money, or the fees are against you. And so I always want to look for what's a good investment first, and secondarily, what is a good tax advantage investment. Some common examples could be oil and gas deals, like drilling costs. That whole space is filled with scammers. So we've got some oil and gas engineers in our community that help vet all of our investments in that space, and that really makes a difference. You can invest in real estate, which will provide some passive losses that will help offset other passive income from investments. And then some of it's just getting smart about what your business, what your real estate is. It depends. It's so much a situational, but one of the last big ones is there's a lot of stuff that came out in 2022 regarding certain credits for investing in solar or manufacturing. And that's part of what we are vetting, doing due diligence on, and then we share with our community.
Wow, I wasn't prepared for all of this download tonight. I think I'm going to be able to process them tomorrow morning once I edit this interview. But yeah, we're connected on LinkedIn. So if I have any questions, I can reach out
Please
to
do. You're more than welcome to.
Thank you so much. So Keith, okay, when should I concentrate or diversify investments?
So you concentrate when you need to grow your net worth. And so if you concentrate your effort in growing a business, you're going to be able, that's how you're going to be able to 10x something quickly. You're going to want to cash flow to arrive and diversify to survive. Cash flow. So once we have your net worth, and let's say you reach 3 million in net worth, and you think you can do get distributions or cash flow at 10%, that's a $300,000 annual income. It's 5%, that's $150,000, and then you've got enough. And so before you've got that maybe 3 million, we got to run the numbers based on your lifestyle. But if you only have $10,000, you're going to concentrate in something, get really good, grow your net worth. And then in time, we're going to help you strategically take that net worth and put it into strong cash flowing investments. Once you've got that consistent, reliable cash flow coming in, then we're going to diversify enough so that you're going to feel safe that no matter what happens, if the thing you concentrated in goes away, you've still got enough diversified stuff that you're safe. But typically, if you're going to grow or you want to continue to grow, concentrating in something that you personally know well, that you control, are familiar with, is what is going to help you grow that further the fastest.
I'm taking mental notes from my own situation right now. And when you were saying, I'm like, okay, shit, what I need to go and check over my financial health. So I guess all of this is going to circle back to this question. What does it mean to be the CEO of your wealth business?
So there's a time where most people, when you've got $1,000, and if you can earn an amazing 15% return, that's $150. Probably not going to help you that much. And so, but let's say you've got $1 million and you can earn a 15% return with some effort on your part, then that's $150,000. So the point is, most people start off in life and they're focused on growing their job, their business, whatever it is initially, and that's the right way to transition. But some people can be so busy making money that they miss the opportunity to become wealthy. And so there's this key transition in your journey through life where you need to become CEO of your wealth business, meaning maybe somewhere around 35, 40, 50, when you've got some significant net worth, where you need to start spending as almost like a side hustle, a little time and energy into how to optimize the business of wealth around your desired goals. And with a little time and effort, you can often increase that return significantly more. So here in the US, you can earn 8%-ish on the S&P 500. And if you just want to be completely passive, by all means, do that. If you want to get closer to 12, 15%, as many of our members, or sometimes more, then it's going to take a little bit of effort, but it's very doable. But with that little bit of effort, if you've got significant net worth, that can yield, in many cases, significantly higher results than you continuing to spend time on your day job or your business.
Okay, when you were explaining, I was like, okay, I may have made a mistake here. And then now you're just explaining it, I was like, shoot, I should have done this and should have done that. Okay, but it's never too late, I guess.
It's never too late.
Keith? It's never too late. I know better right now at this moment.
Yes. The best time to start is when you're a baby, because that's when you've got the power of compounding. But the next best time after that is today.
That's right. Thank you so much. Okay, Keith. Okay, before I have a few more questions. Okay, so what is your best tax advice to multifamily syndicators in private investments? Did you touch this? I don't think so.
I don't think we have.
Yes.
Private family invest. So here's one of the biggest ones.
What is that? First things first, what is a multifamily syndicator?
Maybe this doesn't fit your audience, but
Okay.
For those Those, you have people who put together private equity deals around apartment complexes or other real estate.
Some of my podcast hosts did do that. Yeah.
Okay.
They're
I'm happy to share
doing
the
that.
strategy.
Okay.
So here's the thing. So most real estate investors have heard of cost segregation studies. It's a
Mhm.
way to, when you buy we'll call it a $10 million apartment complex, when you're buying that, you're also buying the pavement, the furniture, the carpet, all the stuff that comes in those apartment units. You do a cost segregation study to break up those independent units on your depreciation schedule of the tax return, which allows you to accelerate the depreciation. Now, the second half of that strategy that is missed is when you go to sell, typically all that depreciation is recaptured at the higher ordinary income tax rates, often 37% or 25%, depending on the asset. And so there's something that I suggest you do is to specially allocate the sales price. And here's what that is. So let's say you go to a typical CPA and you said, okay, I bought it for $10 million and now it's worth $20 million. And he's going to say, great, we're going to spread that sales price over all the assets. High level sort of makes sense. If you dive a little deeper though, and you think of, I bought a $500 dishwasher in one of the units 5 years ago, that if I spread that sales price over all of the assets, that $500 dishwasher is now worth $1,000. You and I both know that a dishwasher used in an apartment complex for 5 years didn't double in value, it decreased in value. So maybe it's worth what, $100, $50, something less. So we're going to go in that example and say, hey, this asset is only worth $100. And what that's going to do is going to eliminate your depreciation recapture above $100. So it's going to cut depreciation recapture from 37% down to capital gains rate. It's going to be the net effect after all that, saving you about 17%-ish to 22% in taxes in that exchange.
So that's very clever and very brilliant insights for me. Okay, Keith, thank you. What work are you most proud of today?
No, probably the biggest thing is most people come for the wealth and taxes. But so one of the things we do in our community is we occasionally have different sessions where people can share and get feedback. And one thing that we had last Wednesday was a portfolio mentoring session where somebody came in and they started sharing all their numbers in exchange for feedback. The man that was sharing had a very substantial high 8-figure net worth and is selling a very large actuarial firm in the United States. He's the managing partner of that firm. And in that process of him sharing his numbers and getting feedback from other successful peers, what really came up though was a relationship with his daughters. He mentioned he was a divorced dad, and so he was looking at a new relationship. And so really it was discussion of money between family, and there was a bigger impact beyond the dollars. At some point, he's like, he didn't really care about the money. Yes, it helps him, it's a tool, but he realizes he's not going to be here forever. So there's this point and lesson that we were making and he was learning was we all want to enjoy the journey because the destination is the same for all of us. We can't take it with us. And so what really ended up happening on that call
Emotional
was the community coming around him and saying, hey, this is how I've had conversations with my daughters, or I've remarried, and this is some of the ways I've had that discussion. And there ended up being a much greater help that was much deeper than any discussion of money could have ever been. That's what I think the power of the community is, and getting around people who truly care. And it's really not truly just about the money. The money is just a tool, and it's really about what do you want to do with that money that's going to make an impact for this life or the next.
So what is next for you?
For me, I want to continue to help people. We're growing our events. If anybody happens to be in the Dallas area, October 25th, 26th, we do an annual event called the Passive Investor Event. You can go passiveinvestorevent.com. It's a one-stop shop where it's focused on helping investors, and it's a place where you can find investments, accountants, attorneys, insurance guys, everything you would need to self-direct your own wealth. We help build a wealth plan around it. And you also get to meet in small group masterminds. We split you into small groups of peers at a similar focus and level as you. So you guys are able to help each other. And what we're really good at is helping facilitate trust and community at scale. At scale almost sounds like a terrible word to use, but it's really about connecting people in meaningful ways, even if there's a lot of people there.
I see that you value those intrinsic how do you call this, impact that you're gonna look to bring. Thank you, Keith. Okay, now we're gonna pivot to a self-worth question because my podcast talks a lot about self-worth, and we did touch a lot about on that today because most people, I too was guilty. They used to, or they still tie their self-worth to achievements, possessions, material possessions, etc., etc. But this question is for you. Self-discovery often involves confronting our fears and vulnerabilities. How can individuals embrace these aspects of themselves to facilitate personal growth?
I think I got to go from just personal experience, my story. So when I sold my CPA firm, feeling like I was important, I didn't feel like I had much of an ego. But sometimes when you go from all these important people feeling like they need you to just traveling the world, you know what? Sitting on a beach, sipping pina colada gets old after a while, and it can get lonely as part of that. And what I also found was a lot of my self-worth was tied up in my ego and that desire and need for other people to want my support or help. And there was some growth that needed to happen there. So by stepping away from a period of time forced me to confront some things in myself. When you get caught up in just going, you never really have the opportunity to reflect and review and solidify some of those learnings. And so for me, taking that step back, taking that sabbatical meant I had to take a hard look at myself and our marriage and our relationship and own my part in that. And it also means today that I need to continue to humble myself, have some reflection time, be open to accountability or at least hearing constructive feedback from others, because iron sharpens iron. And if I'm going to lead by trying to have an impact on others, I've got to lead with a certain level of vulnerability to also invite that vulnerability and impact in other people's lives.
How long was your sabbatical?
3 years.
3 years. Wow. And then you get right back on your feet after that pina colada got old.
No, it was humbling. So I will say, when I started Financial Journey, I thought, hey, I'll just make a post on Facebook, and all these people that knew me before will, of course, just buy whatever I'm into now. And that didn't happen right away. So it was a humbling experience. But it's also been helpful in that over the last 5 years, I've been able to restart, and we've picked up pace. We've hired several employees this year. And what that has done is allowed us to reiterate our product and get better and better at what we do. And now employees help us provide a strong experience for all our new members. And so we've been growing into that, and we will continue to grow. There is probably no time that I will ever say that we've got it all down perfect. And so for the rest of my life, I will be on this journey to help improve what I do. And really, the ultimate impact is to help other people with their desires and impact.
I love that because I moved away from 9 to 5 and now just starting my own hypnotherapy and coaching practice. So it's still its infancy stage, but I'm hearing that you've done it and then your own share of your upside and your downside. So it's also very humbling for me and also motivational. And so I love doing what I do. It's very therapeutic talking to all these guests like yourself. So thank you.
Thank you for having me, Nicolette.
Thank you so much. So Keith, what is your heart's greatest wish?
That I will always have enough. It's something most people never get. Beyond that, I think it is hoping others get that same enough and that they find an impact that touches their heart.
If you could create a quote right now for you to leave to the audience listening and the world as your legacy, what would it be?
Enjoy the journey because the destination is the same for everyone.
Oh my gosh, thank you, Keith. Okay. I need that. I need it to sink in. Okay. How can people reach out to you?
You can find me at Financial Journey. Life is my website. We do a free value add newsletter, or you can join one of our live events, passiveinvestorevent.com.
Awesome. Awesome. And there you have it, guys. You heard it from the person himself, Keith Blackborg. Before we close off, Keith, I'd like to thank you personally for the work that you're doing for the world and for advancing every step of the way, despite the challenges, creating trails for those that will come after you. And for our listeners, this has been that one podcast with that controversial name, You're Worthless. But read that again. The juxtaposition of your very soul. Now, if you find yourself thinking that you are worthless, you're probably not alone. But more importantly, ask yourself a level deeper. If I'm worthless, then why the heck am I here? It is because your soul have chosen to be here energetically, all the way from the ethers. And for that reason itself, you are worthy and you are enough. This has been Keith Blackborg, your guest of the day, and Nierras, your host, signing off. Thank you so much, Keith, for your time.
Thank you.